the chart. I mean, Bookmap has a correlation tracker. Bookmap has a correlation tracker.
Yeah, that's not good. Yeah, that's not good.
Yeah, but this is
Not very
really
good.
something I'm not happy with. Let's see how it displays. Did I?
Oh, it's thinking. Oh, it's thinking.
It's thinking, yeah. I'm not sure if this is the correlation tracker or maybe CL. Where's CL here? CL. Where is it? Do you see it? I don't see it. Dotted tick line. Color UX UV. I have the, yes, it's there. Yeah, you see the problems or some of or the issues we have here with this correlations tracker with Bookmap. It's not really helpful, as you mentioned, so because when we are trading, yeah, I never was happy with the correlation function in Bookmap, so it's not, you can do that, but it's not the best way. I don't know if it helps us. So we will, if we want to know what to do here, you see this dotted lines here. Well, what happens right now, you have to maybe zoom in to see that. And I don't have any manipulation possibilities of this correlation tracker. So yeah, Srini, we are thinking about that, really. Believe me, we are thinking about that because it would be amazing to see a correlation based on that what we discovered and what we see every single day, because it works every single day. So therefore, I mean, it is hard on some days, but if it's dropping down, it's simply going up. It's simply going up. It doesn't matter what you have, or whether you have sweeps, whether you have icebergs, whether you have stop runs or volume spikes or whatever you have. As long as the market trend, if the volatility trends down, the market is up. The only genius conclusion we did today was to recognize that we have had this bunch of volume here, a huge volume traded, indicated by volume spikes, by sweeps, and so on. There some guys have been buying here, and that was the conclusion. Maybe you remember that I said this market is totally bullish, not because it took time here, and that's the hard time to sit around and find a spot to trade, but simply because this phenomenon here. That was the reason why the market found its bottom here, and then it's trading up. It took time from 30, half an hour, 40 minutes, 50 minutes. That's okay. So, and then the market lifts off, and the phenomenon on this case is, if you understand Elliott waves, is simply the wave 3. The wave 3 was in the idea from Mr. Elliott was to say in the wave 3, the last trader on this planet realizes that the market is going up or the market is selling off. So that's the characteristic of wave 3 in the Elliott waves, if you know what I'm talking about. And that's the same phenomenon here. You have a high volume, you see that on the bar here, high volume traded, divergences, and then the market goes simply sideways for at least 30 minutes, 20-30 minutes, and then it starts to trend. During that time, most of the traders are aware, okay guys, the market is going up. And then they are joining the game. They are joining the game and trading up. That's the reason why the market needs, because this move here scared a shit of everyone here. You know, if you are short and then you sold and you see this big move, and most of the retail trader are thinking, okay, that's going further down. Then they're jumping on the train here, to jumping here on the move, and they get caught because the move is going nowhere, and then their stops are hit. Maybe the stops are hit here, and then the price goes against. If the sell stop is hit, the up move accelerates, of course, and then market accumulation starts here. My idea was to see an accumulation around 70, where the kind of double bottom, and then a nice divergence in the VIX here, in the VIXs, in the volatility indices, and that would be a perfect long trade here after 70, because mostly it grinds up very slowly, but then it starts to lift off. And when you're in, let me allow to speak in Mr. Elliott wording, when you are in a wave 3, that's this one, then it goes very fast. You see how fast it was. Again, if you watch them here, it goes sideways here until this, and then it starts up, slows down. Then we have the what is this? That doesn't work. So doesn't work that way. Then we have an pullback, and maybe now the wave 5 is coming into 47.10. But yes, Srini, that's a good point. The question is now how to realize, how to do that without breaking any laws. how to find a solution for that. That's the point. Okay, let's go back to the documentation. So price dynamic, we talked about that. There are excellent and subtle signals. I would say even subtle signals, because they are relying on the order book. As well, tested with liquid futures like ES, not applicable for stocks and crypto. So we'll be very cautious. If you're trading stocks, switch them off. If you have the MVP, it's a little bit more reliable than the price dynamics. So far in this version, it might be changed, or we maybe find another solution in the next releases. Then we will add it. You will have the chance to test it again with stocks. But at the moment, I'm saying very clear that it's be very cautious with stock, and we haven't, or at least I haven't tested with cryptos. So guys, my intention is to give you more back than you paid me for this 4 days. I appreciate your valuation, and that you value my work in this case, but I would like to give you more back than you paid for this seminar. one of the secrets of the market secrets is a rare rare pattern. It's a rare pattern. It's a rare phenomenon. And if you're watching Bookmap, and if you have the sense and you watch it and you focus on your seed, it is nearly a 100% statistic. It's a 100% trade. It's really a free lunch if you spot it and if it happens on chart. It doesn't happen, it doesn't happen every day, especially now when the liquidity is skewed. From my point of view, the liquidity in the US is skewed. I'm not sure. We are not sure, and we discussed it in the Discord room as well and in the team. What is the reason that this liquidity is more? It's harder to see, and it might be probably because the market makers see that more and more people are using a heat map. Bookmap is not the only one. You have a heat map on NinjaTrader. You have a heat map on Sierra. You can use the MZ pack. It has its own heat map. I know that Matt Zimberg from Optimus Future has an I forgot the name of his product, Optimus Flow, and he sold it under other name. It doesn't matter. It has a heat map as well, and I'm sure there are several other solutions out there because the heat map is, let me say, yes, it's fashioned to have a heat map on the chart. The point is you have to understand what a heat map is saying, and therefore it's important. That's the other side of the coin of the that's the other side of the coin. So business done pattern. I mean, that might be something strange or new to you. I'm not sure, but for some of you, of course, that means it has a high statistical relevance for an extremely good risk-reward ratio and is extremely successful. We are examining in that direction as well, but it is really hard to find a description for the business. I call it the business done pattern is a name I gave, I created for this kind of pattern. It's quite clear what happens. So see the chart here. The price approaches a liquidity level. That's nothing special. That happens every day. But then the price starts to drop and trades back into next levels. And the interesting point is, though, that what you don't see on chart. So this guy at this level, what it is, 61 for example, cancel the liquidity when the price moves away of this liquidity. Yeah, you see that? And then suddenly the price finds a support and buyers comes back, and then they are trading against this level again. And in between those levels here at 61, there is nothing. It's an empty, let me say it's an empty space. So the business was done here. He finished this business, went away to grab a coffee, came back. He came back and realized, there's another liquidity here. There's another the price is coming against me. I have to add liquidity here. Excuse me. He's realizing that the price is coming back and he adds liquidity here. That's resistance. That's a very strong indication of resistance. I really love this kind of pattern because it gives me gives me every time some points back. Because if you are shorting this, then in this case, it went back. I don't have don't have added, or I have added. I'm not sure. The continuation of this move. The move went down here into the 53. So if you're short 50, 58, 56, 57, whatever here, and the stop is a little bit, in this case, a little bit higher, 58. It must be at 61. So you have at least 3-point stop here, and it's a little bit harder to see if the price bounces or trades at 60, and that's a little bit of art of trading, so to play with the entry. But if you see this kind of patterns, you can be sure that at that point The first point, the liquidity repels the price. And price, the first one, it repels here. Then the second one will protect the levels, the price at 60, and repels, and then the price starts to trade lower. The characteristics of this pattern is liquidity is cancelled when price was defended. The blank liquidity area is long-term high liquidity price levels. That means that liquidity is cancelled and they don't expect the price trading back into these price areas here. So the break of this liquidity is important. You must see that. You should see that to be very sure that this is maybe, as I call it, business done pattern. You are free to call it whatever you want. This is nothing copyright or protected or whatever, but I think because I am so, okay, they have done the business, they stepped away from their screens and then came back and realized the price is coming back, added again liquidity to protect the liquidity to trade into 60 or 61 or higher, and then the price is, yes, they repel the price here, and then that is a very excellent, yes, it's an excellent opportunity to go against the price here, to sell. I mean, we see that on the opposite side as well, on the other side, but I think the principle is very clear, or should be clear here. So market starts to buy, comes back, and liquidity added again, and second defense of this price is a very nice sell. Short in this case, on the other side, opposite side, it's a long. Business done pattern. Ladies and gentlemen, please have a look. Keep in mind when it happens.
To specify it, so the business done pattern, one of the thing is I have to look into it is that the levels are being pulled, right? So yeah, exactly in that square. So that's one of the three ranks, right? So the level. And being added again. Okay.
You must see that, because at that moment when the price is trading into 60, we do not know what happens next. We can't force in the future. You know the whole story. No one of us can do that. But when we see this liquidity, emptiness and liquidity again, that's really rare pattern. And it's fantastic to see that. I promise you. You don't need to trade, because maybe you need more confidence to trade it. But when you see that, you will be amazed how fantastic it works.
Hey Walter, like a bit like which happened today in S&P in the ES. I'm sorry, from 18. I'm speaking European time. 1846 until 1913. 1913.
You see the same V.
You see the same V.
V developing and then
V developing and then it goes back into liquidity.
Yes. It's, you know what. Yeah, you are right. If you are right, yeah, that's the point. That could be a very nice pattern. It's not perfect, but it alerts you. It gives you the idea that they are trying to protect 4710. And I've got today the how to say, the institutional levels, and the predicted high was at 4707, I think 4710. I don't know how they how they make that. I can't explain that. I can't say that. But when you see that, that's exactly what I'm talking about. It's not a perfect one. But business is done here. The price is moved a little bit earlier. Away. Let me see, 3 or 10. Yeah, 7 points. That's a little bit too much. It's not perfect. And you see by what I'm talking about, the obscuring of liquidity, of liquidity happens because since March 2021, we see this liquidity around the best bid offer here. The liquidity around the best bid offer. You see that? This is exactly 92, around 10 points. That means 4 points on the ask and 4 points on the bid side. You see how they are trying to obscure. It goes away when we have announcements or someone is speaking or we see sweeps. That's a very short time where this liquidity disappears. Not here, but you will see that it appears for a very short time, then it comes back immediately. On some days you will see that it disappears for 1, 2, 3, 5 minutes and then it comes back again. That's what it's really disturbing, because you don't see it's hard to see what happens on the distant price levels. So we have a clear business done pattern here. But however, this is a little bit disclosed by this, how to say, liquidity channel. Whatever.
Walter, just more specific. So where do you enter in this business done? Where do you recommend us to enter? Enter the trade.
Yeah.
Enter the trade.
I'm taking the second leg here.
You take the second leg. You take the second leg when it starts to show the.
The question is now, it's not exactly. That means what you see here is a kind of exhaustion in the move. You see they're traded down into this support and then coming back, and you see the angle of the move. It's let me say 45 degrees, roughly 45 degrees here. Yes. And then they simply don't have the power at, let me say, 58, 59 to trade higher. And then when they are entering 58 or 59, then this liquidity adds again and this liquidity is pressing the price down. So I'm always take the second leg when I see the pattern, because then when I see that, I know that's a business done pattern. The question then, the next question is where to enter, maybe 58, 57, but the stop must be a little bit more away, so you have a higher risk here. But that's the entry, the second leg, not the first one. I mean, if you see something valuable and which appeals you here in the first trade into the liquidity, maybe this institutional levels, whatever you might have on your chart, then you can of course go short here. That's not the point. But what I wanted to say is this pattern is highly reliable. It's really reliable, and we are working to make it, to test it based on our data. But it's extremely hard. You can measure icebergs because you have a clear number. You have an iceberg, you have an order ID, you have you see that order refreshing, and you know that's an iceberg. That are very clear parameters. So, but in this case, these parameters are more hard to observe, to how to say, to describe. We as human beings, individuals, we can describe it because our brain recognize that. So as we see faces, okay, that's a business done. But it's more hard for the machine, for the PC or for the algo to recognize this pattern. I just want to add it because it's really, guys, it's really, really valuable for every one of us. I talked,
Well, one more quick question. Can you go previous chart, please?
Yes. Since you are a big
fan of institutional levels, it seems to me, do you add more relevance then when these institutional levels cluster, like at the 461 level, indeed, where the
let me say that way, Yves. I became a fan because when I when I met these guys, I have several friends all over the world. Then I was extremely skeptical. We have what you name it. We have thousands of lines. It doesn't matter. We have spot gamma. We have volume profile lines. We have unfinished auctions. We have finished auctions. We have yesterday VPOCs and today's POCs. We have literally thousands of lines. And when I started to watch this stuff, I couldn't believe. So I became a fan because I see that they are working every single day, and that's simply amazing. And therefore, when I see something like that, you see that that's nothing hindsight. That's all that was in the book. When I get them in my time here, maybe if I'm around, if I post them on Discord, at least half an hour before they open. So that was the
numbers you post as daily
Yes.
prep numbers.
Those are the institutional.
Those are the
Yes,
institutional
yes,
levels.
yes. I just don't want to disclose. I mean, that's not my invention here. This is not what I have a control of. Maybe I'm looking to get some kind, maybe of franchise of this level. So to make a subscription to you for NQ and ES, and maybe they have another ones. For other maybe instruments, but I don't have the control of them. So either when I get them, I share them, but I can't do anything with them. So it would be great to have them. My idea is to have an add-on for Bookmap where this institution level will come in, and it will be drawn automatically on this. On Bookmap, as well as NinjaTrader, as well as Sierra Chart, and so on. But at the moment, nothing. So I post them in the room as well on Twitter, and you can simply watch them. I mean, it's up to you. You can put them on the chart. If you have the trade file, use the price alerts and to see if they work or not. You will see most of the day they are working like a rail track here. You see, going down here. There's nothing. There's really nothing. Look here. Okay, we have a pre-high here, but the spot gamma levels are far away, where the price turns. I take them.
Column from you with the institutional levels, but I can't seem to manage it. So I will ask you to do a team viewer with me to install that column.
Yeah, of course I couldn't. It's really easy. But I give you a link. It's really easy to do so. You see that here on this chart. On that chart, you can use any chart you want. I mean, I'm not deleting them. They are all in the room. So they have, I would say, my estimation is they have a statistical probability which is greater than 70%. I have never tested them or back tested or forward tested them. Institutional levels are based on options and market relevant levels. So they are simply using these levels like maybe Spot Gamma is using or Cem Karsam is using. By the way, Cem Karsam is using nearly the same levels for you, just for this. That's an info just for you, but he's posting them quite lately, so maybe 2 hours after the open. Institutional levels are based on options and market relevant levels, whatever market relevant means. Institutional levels are courtesy of institutional associates I have, and it seems that algos are trading around these levels. I'm just voluntarily sharing them for US future only. I have them as well for NQ. And they are available pre-market, that's important. And there is no connection to Spot Gamma if you ask. Can be added to Cloud Nodes. That's extremely easy to do so, Eve. I'm sure you can do that right now. Give me the second here. You have to insert a Cloud Nodes column.
Insert a column.
Then add Cloud Nodes. And then I'm copying the link here in the chat.
Okay.
And that's it.
Docs Google. Yeah, in the chat.
So you just simply open an insert column, add nodes, Cloud Nodes, and copy the link in the Cloud Nodes URL here in this field. That's it. I meant that this
All right.
all,
Thank you.
keep in mind, this is all voluntarily. So Chuck from our room is doing that. That was done by Doug, of
Doug.
course. Yes, it was done by Doug. And he needs a break, as we all need a break here of trading and leading the room and commenting and answering and doing live trading. And now Chuck is doing that, and based on the institution level, based on the Google Docs, it's a CSV line, and it's voluntary. When I after our live trading week in December, I will take a break, and I'm sure I want to switch on any chart here on my screen, and I won't post them as well as when I'm on holiday. A lot of people ask if how to continue the service. I don't know. Maybe we should find a way how to do so. I'm not sure how to manage that, because it's not something I can control. Use them, check them, play around with them, whatever you want. You will see that most of the days they are quite interesting to watch and to see, and you will see that price seeks these levels. Why? I don't know. My suggestion is that they are simply, the big institutions are simply firing their algos around, adding liquidity and canceling liquidity around these levels, and that works nearly every day. Just as command, I can't add any more to this institutional levels. At the end of the documentation, I have tried to do to present or to do a so-called cheat sheet. Frank, the Batman pattern. Good, why not? Good point. My view, and today it was a little bit chaotic at the beginning, is that I'm preparing, and in December, when we have this trading week, I will start, and we should start simply, and that's my suggestion, to see where's liquidity. Do we have a clear picture of the market, or do we have not a clear picture of the market? That's my idea. So first of all, do we see liquidity up and down, or is the liquidity in between of the instrument you are trading? That means NQ, CL, gold, stocks. By the way, as I mentioned, I think stocks are a little bit more easier to trade than futures, because when you see Apple, Microsoft, and others really very liquid stocks, you see a very an excellent liquidity areas where the price is most likely to trade into. So we need a broader market view to understand what is the ADD after the beginning. And then at the session start, I'm always watching the SPY, the WIX, and the VXXUV, and the bonds. I'm watching the ADD and ticks. And what I'm using then is simply Bookmap to find sweet spots, to understand what, for example, the daily levels, by that I mean the institution levels. What are the most important daily levels? The price dynamics at the beginning, who is leading, that might be a good indication, long or short. Dynamic hidden order plot, yes, that's, we discussed the not the issues, but how reliable they are. If the market is trending in very clear, like yesterday, that was a very clear sell-off, and you see the VIX spiked up, then simply joining the market without asking, bid ask, and let the market go, and I hope you get 4, 5, 6 points out. Today, I added volume spikes in the updated documentation at page 96, 97, and 98. And what we discussed today is the low of 7T, where we see this huge volume spike, accompanied by sweeps. And you remember I mentioned that's the reason why the market will lift off then from this level here. The ID development as well. That means I have to rewrite that. The ID belongs to the dynamic hidden order. And the sweeps. I'm not sure how to value the sweeps when we see the big player intentions. It's quite interesting to watch them. But what can we conclude out of this development? What is the result for us out of this development? This is a question. This is an ongoing question we should discuss then every time we are meeting or we come together, or maybe we are in a pub and restaurant and talking about the sweeps. That might be as well be a philosophical discussion as like with as the same one as with icebergs. Of what value are icebergs? We should really discuss it and think about that. How do they help us to make money? I mean, we are here to make money, and not to discuss theoretical thesis or whatever. And the question is, what do icebergs contribute to our success? As well, what do sweeps contribute to our success? I mentioned that sweeps can be traded as a counter trade, or we maybe will introduce these B lines, these breakout lines, to give an idea where when a sweep happens, in which direction we should have a look for a successful trade, either downside when it breaks downside or upside. But that's all simply, it's not a clear picture like this. As Frank mentioned, the Batman's wing, for example, or the business done. Business done is extremely clear. You have not to. We don't need to discuss it. But with sweeps and icebergs, we will have an ongoing discussion on how they are helpful, how they can support us in making money. That's the Soleil goal and goal of trading. We want everyone of us want to be successful, profitable in the long run, not just gambling, but in the long run. If you, my idea is why I'm doing that is, if I stop trading today because I want to take take 1 year off of my life and joining and doing anything else, when I come back the year after, I'm sure I can use this knowledge and start again, not from scratch, but I can start again, because the dynamics, the principles, and all that what we spoke about this week will never change. The dome will never change. The order book will never change. The auction will never change. The liquidity will never change, because we need it. As well, yes, the price dynamic, who hit the bid and who is lifting the offer, will never change. So there are some undeniable characteristics of the market that will never change. And when we understand that, we are simply coming back and starting to trade again, and you will see there's nothing different. The only difference is always what you are trading, what are you for personality? Are you someone who is really patient and can sit around for hours and watch the treasuries, for example, developing? Are you that patient to do so? Then maybe the right instrument might be the ZB, for example, or ZN, or ZF, for example. That might be the right instrument, because if you are in at 29 because that was a nice big iceberg, then you are buying this 29 and it goes up slowly into 61.02. That means 30 to 29, 3 points, 5 points, maximum 5 points. You get 5 points out of this market. But 1 point is $32. Oh no, fractal, excuse me. This is our fractals. Fractal is $32. So do you mean you make 5 ticks, and it's not 5 ticks, let me say 5 ticks or 5 points. It means 5 by 32 means $150 or a little bit more. So if you are extremely patient, but the return is you have nearly no slippage. You have you can always buy or always sell your contract. That's the beauty of the treasuries, or even if you are trading soybeans, it's as well. I think 1 point in soybeans is as well $50 here. Very clear moves. Interesting to trade. You don't need necessarily, Myron, you don't need necessarily to trade NQ. If you are feeling good trading soybeans, why not? Or treasuries, why not? It depends really on the personality. I know a lot of friend of mine who are saying, oh, they are trading cryptos. I have to trade cryptos, and then they are burning their fingers very, very fast. Because cryptos are extremely thin instruments. Or we have to trade the DAX because it's fashioned. I don't know why, but maybe it's fashioned to trade DAX. I have a different opinion, because I'm someone who can concentrate for 2 or 3 hours sitting on the front of the chart. Then I have to do anything else, because that's my maximum of my concentration is reached then. And the point is, maybe the ES is the best instrument for the first 3 hours, at least for myself. And therefore I'm sticking with the DS. If you think you need something fast, then you're going to NQ, you are trading CL. Russell, we haven't talked about Russell here. Again, thin instruments are quite quicker than the medium instruments, although when we talk about volume and liquidity for ES, that changed dramatically. I remember the times when the ES has had 500 and 600 contracts on each price level. That was, I don't know, 3, 4, 5 years ago. Then it took simply time, and you have to be very patient. You have to be very patient, waiting for the yes, and hopefully get 5 points out of the TS of the yes. Okay, guys, I think I'm finished with the presentation. Oh, there's another cheat sheet. I mean, you can build your own. That's simply an idea, an offer to you. That's an offer to you to make your own trading sheets. Maybe you have it in your mind, in your head. You don't need to write down, but that's an idea what you should look at. Liquidity is always the first point you have to look. Even in stocks, I would watch the broader market. And look for sweet spots. They are different for stocks. You have the price dynamics, you have the market volume pro, you have the trading into liquidity levels. Volume spikes are quite helpful. Give it a try if you have the, let me find the book map. If you are trading, let me see, where's Apple? For example, one example. Yeah. It was Apple. I think it have been the FANGs who to push the price up in the US as well. So if you are trading stocks, I think from my point of view, stocks are, I wouldn't say easier, but more, how to say, better visible, or better, has a better liquidity visualization and visibility than ES. The first impression was to buy Apple, wasn't it? I mean, you can't sell Apple.
Yeah, I mean liquidity up. Yeah, I mean liquidity up.
Absolutely, yeah. You
That's
can't sell Apple. That's impossible. At least not today. I'm talking about today. Let's see the Tesla. Oh, what happened here? I mean, Mr. Musk is selling. Look here, the price dynamics are not reliable here in the for stocks. So switch it off. Let's go to the beginning. Come on. Move, 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 move. When we look at Tesla at the beginning, yeah, we have, that's a little bit more difficult than Apple today. But you know, for every single stock, you will find reliable, good pattern. I would rely for stocks when I'm trading them with options based on the liquidity. So, and maybe, not maybe, but I would use also this volume spikes, which indicates an exhaustion. It's Tesla was quite hurt. Either you go down or you go up. So the question is where to join, what to make here. That's a real challenge, yes. But you have as well. You have as well. Either you know what to do, what you want to do, or you don't know, and you see 1120 and you see 1090. These are the first. This is the first you see on your chart when Tesla or when the market starts to trade. If you're not sure what to do, if you're really not sure what to do, wait. That's always a good a good advice. So if you don't know what to do, simply wait. Simply wait. Don't rush into a trade or don't do anything here. And then see how the instrument or the stock or whatever you're trading behaves when it trades into liquidity. That's the second best advice I can give. If it starts that way, if you have let me say two extremes. I mean by extreme as well, if you have two liquidity levels like here in Tesla, and you don't know what to do, wait until the price hits liquidity, and then maybe that would be a good point if you're buying options, buying a call here at 90. And hoping then for 1110 here, which worked. But mind as well the time, and it surges up or went up here, but in very, very long time. That was not excitement buying Tesla. It was not excitement. Again, liquidity hits the liquidity, and then I think this disaster started. I mean, we are talking hindsight here, guys. That's easy. But what I wanted to say, even if we are not talking hindsight, look for liquidity. Where is the liquidity in stocks? Where is the liquidity in stocks? And it's much, no, it's not much. It's absolutely clear. Let's see Microsoft. Ah, come on. I wanted to show you how to adjust it. Yeah, that's. Oh no, it came up. It came up after the open, half an hour out after the open. When we start, we see that this on the screen, and if it trends higher, maybe a breakout into this liquidity, in the next liquidity, and 40, maybe 41, not sure, is trading then, and then you see this liquidity coming up. Then you are alerted to say, okay, I'm very cautious with my longs here, although it worked extremely well here. Yeah, now it becomes clear. Next liquidity here, and that's the next level. So what I wanted to point to is that stocks are quite, yes, from my point of view, it's the picture might or is at the beginning is very clear. You don't have this, you see this noise. What I'm saying, that's noise here. This liquidity channel. You don't have it. The interesting point when I see Microsoft right now and I see this extreme high liquidity, this are 45,112 contracts sitting at 337.20 for 45,000 contracts. A huge amount. Now Microsoft is trading at 41.37. Might be a nice trade into 37, but and that's the correlations I'm watching is if Microsoft is trading into 37, then you can be sure that Nasdaq is coming down, and if the Nasdaq is coming down, then ES will be trading as well lower. Let me have a look at Apple, if it's something similar in Apple. No, there's nothing. There's a high resistance areas at 160, 157, 58, 800,000 contracts. That's the accumulated value here. 800,000 contracts, 500,000 contracts. That might be a kind of resistance, but there's nothing on the down, nothing significant on the downside. 143,000 contracts, 135, but it's far away. So 110,000, 120,000, 545. So nothing significant on Apple, but on Microsoft, and Tesla is as well weak. And this is for sure the reason why as well the ES is dropped down here. Excuse me. I don't know. Someone wanted to add something. I thought someone wanted to say anything, something. Okay, guys, I'm done with my presentation, and we have had 4 exciting days, and we will have 5 more exciting days in trading. And my suggestion, I think, let me say that it was a little bit chaotic at the beginning. So the good trades we could have taken were a little bit more, were suppressed by the noise we have had at the beginning. So therefore, I'm really cautious with live trading. Not cautious, but it's really demanding, because when we are trading, I think we should focus on trades, and then taking the trade we understand, and we can where we can control the risk. That's at least my point. I don't want to be chased simply because someone wants to go long or someone wants to go short. We will have my invitations there. I will send out the invitation, and will as well block the times for this week of December 13. The only exception is if something happens. So I don't know, sickness or whatever, Corona is still on the plan here as well in Europe. I don't know how the situation in the US is. And if something happens, I will inform you. But on the other side, I would like to have you all in live trading in the week of December the 13th until December 17th. And then I will send strict behavior rules, like be focused. We can discuss questions after our trade, or we can take a time, for example, 11 to 12, to answer the questions and to discuss what is really important. And that's the point. This week was the intention to trade if we can trade, or we find sweet spots to be focused and see. Everyone sees the market with his everyone spots and understand the market with his own eyes. Therefore, my point was to say, okay, do a detox week with your settings. Put only in case you are trading ES. I just can speak only for ES for you guys. Put the SPY, the week VIX, VXX, UVX, and the bonds on your chart, and then I think it makes sense, because you will be more. You will be more. I'm missing the word right now. You will get more sensitive. You will be more sensitive. You will become more sensitive for the market. You know, and understand that we have to. What I'm trying to resist is we are, when the market moves in one direction, we want to be in. That's a possibility if you want to scalp, for example. Therefore, for those of you who are scalping, you have a look at the price dynamics. It's extremely important. It's extremely helpful. You will mostly get out of few ticks, few points, if the market approves and the market goes in your direction. It's highly possible. My intention is to get 5, 6, 7 points out of the market, maybe 10. And as I mentioned, I would like to enjoy my life. That's my goal. If you are trying to resist and watch only what you see on the charts, without having any indicators, then that makes you a little bit more sensitive for the market. I know we need a RSI. I know we need a moving averages. I know we need a volume profile. We need a POC. We need everything. I know that. And I'm not saying you shouldn't do that, but I'm saying take your time, allow you 1 week simply with these indicators and see what happens with you. What is this thing doing with yourself? Does it help or not? If not, then come back and you find your own way. Just to make a little bit more sensitive for this kind of trading, because as you can see, I mean, it's against hindsight. We have nice divergences here as well, and the bond starts to drop off here, or started to drop off here. We have to be focused on that. Yeah, Frank, that's a probability. The intention of this week was to build a